Thank you so much for joining us. I think we can start. A brief introduction. My name is Karin Kalinda. I'm an investment analyst at Vilgro Africa, and I'm supporting on the HealthTech Hub Africa program as well. So welcome to this session. We're really glad that you could be here. And this is our fourth masterclass in the HDHA program. So far, we've had 3 masterclasses. We've covered product design, go-to-market strategy, and operations. And if you've missed any of the sessions, please feel free to check out the content on Babel. We have all the content that has been shared so far. And for today, we're going to be talking about investor readiness. We have Jackson, who is the transaction lead at Vilgro Africa, and he'll be leading this session. So over to you, Jackson. Thank you.
Hi, everyone. I hope everyone can hear me.
Yes, we can.
Great. So I think we can just get started. Let me try and share my screen. Hi, Karin. You might have to enable screen sharing.
Victor, please facilitate that. Thank you. Victor should grant you access to be able to share.
Yeah, I'm still unable to share. So Victor, you can try to enable that function on your end.
I'm helping Victor to first. Please, Gary. I think Gary.
I'm sorry?
Check again. I think I've updated.
Yeah. Let me know if you can see my screen.
Yes, we can.
Perfect. Thanks. So yeah, welcome to today's masterclass. So we'll be having a conversation about investment readiness, how to get ready for funding. And I'm very sure you have had access to this content on Babel. So I may not go through the slides word by word, also because we only have an hour. And I would like at the end of the session to allow a few minutes for questions. And then if we have time, there might be a bonus session where I might show you a financial model that we have prepared before. So I guess we'll just get started right away. So here's what we have on the agenda. I think on the recap side, Karin has covered sorry. Yeah. I think you've had the recap. We just see one slide on that. And then we'll have a bit of research, what's happening on the landscape, what are the current developments, which is some research, there are some numbers. And then we'll spend some time on the pitch deck, how to craft a good pitch deck, then how to present it to investors. And then lastly, we talk a bit about how to manage investors. So let's just go straight to the recap. This is the one that Karin was referring to. We've had 3 already. This is the 4th masterclass. We're focusing on investment readiness. So let's get started. Right. So just a bit of data to get us started. You find that from a continental perspective, Nigeria and South Africa have carried the bulk of most investment for health tech funding over the last couple of years. So that's just a point to think about, right? And then Africa carries only over 1% of the total global R&D budget. This number is of 2016. This may have changed a little bit. Maybe now it could be 2%. Yeah, but then as you can see, most money is not here. So I think there's a call to action for African founders to really focus on this and see where this funding is and how to actually get ready for it. Now, it's not all bad because the sector has experienced quite some growth. I think 50% growth has been experienced over the last couple of years. So there's light at the end of the tunnel. So things are not all doom and gloom. So basically, over the first half of 2022, the startups in this region have raised about $3.5 billion in total. So the message here is that the funding is there, is available. In fact, I dare say that there may be more funding on the contrary that there are already investments. So I think this is a very good discussion to have at this point. How do you position yourself? How do you get ready for funding? Who has this kind of funding? How do you approach the funders? And how do you organize yourself to be attractive for investment? So again, a bit more data. As of last year, you can see the funding distribution on the continent from online pharmacies all the way to diagnostics. This has been the trend. So I'm very sure if you look at your business, you can see where you fit. These numbers keep on changing. This trend may not be the same this year. Africa is a very high growth and dynamic continent. So this is just a point of information, something to ponder as we proceed. Great. So how do you develop a good investment strategy? So there are 7 things I'd like to call out today on how to develop a practical and workable investment strategy. I'm very sure you've seen this slide before, but then basically you need to be very clear on your objectives. What are your short-term, medium-term, and long-term goals? What do you want to do with your business? What are your desired objectives, right? Do you have revenue targets? Do you have product development targets? What are you targeting to do over the next, say, 3 to 5 years with funding, right? And then you need to have a very good picture of your current resources in terms of financial health and operational capabilities. Talking about financial health, when you are building a financial model, for example, you're forced to think about some of these things. What has been the historical trends in your business? What does the future look like? And how are you going to achieve that? So it's very good to actually understand, to have a very good sense of what your current resources look like. And then understand your market pretty well. This is where we talk about what the total market of your business, what of that total market are you actually able to obtain in a period of time. If you're talking about the market in Africa, for example, being $1 billion for your industry, how much of that for a company, for example, in Kenya or Rwanda, are you able to obtain in the short term and medium term, right? And then what are some of those low-hanging fruits in your business? What can you invest in your company and actually be able to get some quick wins in the medium term, right? So also have a very clear financial plan with very clear priorities. Again, as you work on your financial models, it's very good to have this in mind, even as you have this big, hairy, audacious goal, what you want to do in the next 5 years, then it's very good to think about what's urgent and where can you invest the least amount of money for maximum impact, right? So also have some KPIs that you're monitoring in your business. What are you measuring? What are you monitoring? How are you able to illustrate traction using those KPIs that you monitor, right? And who are the stakeholders involved in your industry? How are you engaging them? How are you being able to synergize with other stakeholders and other businesses in the landscape? That's something else very interesting to think about. So let's talk about a pitch deck, right? Mostly you don't have a lot of time to pitch your business. If you go to an investor showcase, most of them will give you like between 5 and 10 minutes, usually 7-8 minutes for you to actually present your entire business, your entire business case. So let's see how you can organize your pitch deck to make it effective. Right. So the first slide, and just to call out at this point, the slides don't always have to follow this order. At times you might have to shuffle things around for better flow, but then just use this as a guide, just to ensure that you're answering most of the important questions and you're presenting most critical content to investors. So the type of slides, you have to make this memorable. Don't make it plain. don't make it just black and white. Try to have, like a graphic, make it very memorable, and have your logo on it, have a very concise tagline on the cover page. Make sure that when someone sees it, they start to get an idea of what you're about in your business. So the second slide, or the second thing to think about when you're working on your pitch deck, is the problem statement. So what are you trying to solve? What pain points are you trying to address in your business, right? Where's the gap that you're trying to solve? Is there evidence, for example, that what you're having is not a solution looking for a problem, right? So, and here is where you talk about, for example, limited access to healthcare in rural areas, if your business model is aimed at solving that problem. So the main thing to note here, highlight what is the most urgent need, where is the gap, illustrate that it is not extremely difficult for you to create demand in your business because the problem is there and the problem is pressing, and you can show that very, very clearly. So the solution is really what you're about as your business, right? So you've identified the problem, you know what the gap is. Now you need to showcase how your business will solve that problem, bridge that gap in the market, right? So this is where now you discuss your model. If it's a digital platform, for example, you talk about how you're solving the problem. If it's the issues of access, how are you going to the last mile and things like that. So this is where now you show your problem market fit, your product market fit, I'm sorry. Now, I referred to this earlier on your market opportunity. It's important for you to show this market for your product. This is where you talk about some and term and some, think about it in a funnel kind of fashion. What is the big market? For example, if you're talking about, if I may just use an example of a service like Uber, you come up with an app for transportation, then how do you think about the total market with moving around? At times it's difficult for you to say that, for example, we have 8 billion people in Africa, so that's your market. So it's good to drill down a little bit and see who can actually be your customer. Are these people who are working class, who are moving around every day? Is that total market? And then being able to narrow down from that, and also being able to acknowledge that there are other people in the market, there are people who are doing this in the market, this competition. So you cannot assume that even given 10, 20 years, you'll be able to capture the entire market. So ask yourself, that being the total market, and seeing how you understand the competition, what's the maximum market potential you can talk about. And then the way to think about the opportunity market, which is the SOM, really is, for example, think about the next 3 to 5 years. What percent of that market can you actually cover? Is it 3%? Is it 5%? So then you're able to turn it down from, say, $1 billion total market to something like, I don't know, $50 million that you can actually gun for in the next 3 to 5 years and be able to achieve it. So that's the way to think about it. It's very critical to illustrate that you understand your market size and who else is in the market, and how you are able to get to that market. And at times also to illustrate your go-to-market approaches. How are you going to target that market, and how are you going to convert it? You're supposed to be able to address all that in your pitch deck. Then your business model, how do you make your money? What are the revenue streams? Is your business based on subscriptions? Are you selling a product? How is your money made? Do you have more than one product? Things like that. How do you price for your business? How do you show that you have thought about pricing? You're not leaving value at the table, right? How do you get your product out there? How do you distribute your product to reach your customer? If it's, for example, B2B, how are you reaching other businesses, B2C, B2G, and things like that? So it's basically being able to clearly show how you're making your money, how your product is leaving your business to the customer, and how you're monetizing that cycle in your business. So this is extremely important, traction, right? Because what makes you different from other businesses in your domain? How far along have you come in your journey? So, for example, what numbers can you report? If it's impact, how many people have you impacted with your business? How many customers have you served? How many products have you sold? And things like that. How much of the market have you captured? if you think that you can capture 10% of the market in 5 years, and now you've been existing for the last 3 years, are you able to say what percentage of the market you have currently captured? How many customers are using your product and things like that? These are very important figures to report. There's some of the metrics to think about here are, for example, user growth, revenue growth, your customer acquisition rate, your retention, and things like that. So the other thing, like I mentioned earlier, you're going to have competition in one form or the other. Even in the most unique business model, you find there's someone who's doing something quite closely tied to what you do. So at times when you say you have zero competition, sometimes that may not be very convincing. It's good to think about competition in a detailed manner. What parameters are you using to compare yourself with other businesses? So it's really good for you to think about who is in your landscape. What are they doing? How do you compare with them? How do you have a competitive edge, right? And one way to do this is just have a slide. You can have like a column of all the companies with yours, say at the top, and then the metrics in columns, and then just using checks and crosses, see how you compare to the other companies in the market using some maybe 5 or 10, 5 to 10 parameters, not more than that. So the go-to-market is how you convert the market to revenues, basically. How do you reach your market? What kind of partnerships, for example, do you need to create in new markets for you to actually monetize your market penetration? What's your marketing and sales strategy? Are you focusing on below the line, above the line? What's your approach to reaching your customer? For example, are you using a distributor? Are you using a direct sales approach? Is it a mix? How do you come up with that? So this is why you illustrate that you've thought about how to reach your customer in the market. So we all know that tech keeps on changing every time. It's very dynamic. So how are you positioned to make sure that you don't become obsolete with the time when tech changes? Right, so here you talk about your tech development, and also the fact that you've thought about protecting your technology, things to do with intellectual property. Do you have patents that you have licensed? I mean, you've registered. Are you working on some and things like that? What do you need for you to make sure that you have protected your business model? And then the other thing to think about is financial projections. I referred to financial models a few times a few minutes ago, and this is very, very important. If you have time towards the end, I could show you an example of a financial model that we have built at VilGrow before. But the key thing to think about here is what assumptions are you making, across revenues? What products do you have? What kind of numbers do you think you generate year 2, year 3, year 5? Usually we think about 5-year projections because most funders will have a 5-year investment cycle. So that, as I find that we think about 5 years, you might find that beyond year 3 things get a bit fuzzy, but it's also good to show that you've thought about it. So think about your revenues, your prices, basically being one of the key drivers to your revenues, your volumes, what's your cost structure, what are your direct costs, what are your overheads, how do they change? What does scale mean from a people perspective? For example, how does your cost of people change as you grow your business? How does your cost of connectivity, for example, change as you grow your digital platform and things like that, right? So this is extremely important. Make sure that you have a 3-statement financial model, have your income statement showing your revenue and cost structure, or the key margins, for example, your gross profit margin, your EBITDA margins, your net profit margins, and things like that. So you need to think about what are the main metrics to track in your business from a financial perspective. In that case, what your burn rate, what your monthly recurring revenue, and things like that. So like I said, try to have at least a 3 to 5 year projection. Make it detailed, maybe month on month, quarter by quarter, just depending on your business cycle. Then have summaries and dashboards, just to make sure that the results of your financial model can be seen easily. So the other thing to talk about here is the team. So sometimes you might have a large team, maybe you have a team of 200. So you need to describe, for example, the senior management is the CEO, CTO, COO, the head of marketing, the other heads. Maybe don't have to have too many slides with more than 10 people. Bring out the key competencies that make your team strong and unique and able to deliver on your promise. So have some nice headshots in there, and maybe some 2 or 3 sentences to summarize your business, to summarize the business experience or technical experience that your team members have. And then also to highlight here, you might have a board of governors or a board of advisors. It's good for you to show that, because that shows you, that illustrates who is backing your business, who helps you to open doors, who helps you to ensure that you're having proper governance in your business. Then the other thing is social impact. What's your theory of change? How are you changing lives with your business? What is the impact promise that you're making your investor? For example, what are the key things that you're tracking? Are you tracking, for example, patients treated? Is it jobs created? Is it how many people have been educated? If you're talking about education and things like that, what's the patient satisfaction rate for healthcare businesses? So here, depending on your business, it's good to be detailed. Think about what are the social impact metrics that you're tracking in your business. And then the ask is very important here to make a compelling ask. How much money are you looking for? Is it $1 million? Why is it not 0.8? Why is it not 1.2 million? Right? So you should let your financial model inform how much you need in terms of funding. Investors will always try to look for the connection between your financial model and your funding ask. Are you looking for equity? Is it a convertible note? Is it a safe note? Are you looking for a grant? It's good to be very specific on the instrument that you're looking for. And then what are you going to do with the money? Have a broken down, a proposed use of funds. Are you do you want to use your funds to further develop your infrastructure? Do you want to hire a larger team and things like that? Just have a breakdown of what you need to do with the funding. So that's about the pitch deck. I'll pause there for a few minutes and see if anyone has a comment or a question or anything to add. Anyone?
Hi, Jackson. Good afternoon. This is Oyindamola from Advantage Health Africa in Lagos, Nigeria.
Okay.
Thank you for the presentation so far. I have a question, because I know that a number of times we see pitch decks where they say or opportunities where they say your pitch deck should be between 8 to 10 slides. But here I'm saying we have 13 slides. Are there some slides that we can take out? Are there some slides that, what do you suggest going forward? Because our current pitch deck, I think, is about 11 slides. And I see that there are some things that you have mentioned that we don't have. But also, in a bid not to make it too bulky, like you said, we don't have enough time to, talk to these people. So what do you advise?
Yeah, thanks for that question. And the way to think about that is, number one, how much time you have, because in some cases you only have 5 minutes. So if you have 5 minutes, 13 slides may be too many. You might want to have, for example, 5 slides. If you have like a physical meeting with an investor where you have half an hour, you might want to have like 10, 15 slides. So it all depends on, number one, how much time you have. And number two, the investor is specific on how many slides you must have. For example, if they say 8, there are some that you could combine. For example, let me try to go back here. You might want, for example, to combine social impact with your projections on one slide, if that's possible. It's really about how much time you have. It's really storytelling, and they don't really have to follow each other the way I've presented. So what's important here is the flow. And if you check on the top left corner here, with just taking this slide here, for example, we think it can take 2 minutes. At times you only have a minute, right? So you need to tailor the content according to the amount of time you have. So there's no rule about it, whether it has to be 5 or 10 or 15. It depends on the story that you're telling and how much time you have. And if the investor has seen maybe a larger deck before, because you might have sent your longer deck to the investor ahead of time. So when you're presenting now, in this case, you don't need a very long one. You really just need a 5-7 slide deck. So it all depends on how much time you have, and if the investor has seen your information before, and things like that. Does that help?
Yes, it does. Thank you very much.
Thank you. Any other question, comment? Maybe the other thing to mention here is make your deck as visual as possible, right? So don't have a deck full of numbers and words. That can be boring. So make use of color, make use of graphics. Don't make it too busy, overcrowded. Just make it nice to look at. Yeah, so it's easy to talk more around the context when you have a nice slide than trying to read word by word when you have a slide with like 10 paragraphs. So it's always nice to make it appealing aesthetically. Great. So if there are no other questions, carry on. Was there a question?
Thank you, Dr. No, there wasn't. I see people were asking about the slides. I've responded that the slides will be available on Babel by the end of the session, after this session.
Yeah. One quick tip to also give you on your pitch deck. If you have budget, it's nice to make use of a graphic designer. When you have all this content that you have worked on, a summary of your business model, if you have this number that you have worked on your financial model, you have these nice headshots and summary of profiles. If you can get for example, a graphic designer, they know how to organize content and make it look very, very nice. So budget allowing, I think that's something that I would also recommend. Great. So let's see what are some of the things to consider when you're presenting your story to an investor. So there are a few ideas here I like to call out. They're not always 9, they can be 15. I mean, this also just depends on experience, how long you've done this. So there's some things that we'd almost call best practices. One of them is being very clear and concise on what you're saying. Like I said, don't make your deck too long or too busy. Make it very visual. Use as few words as possible to tell your story. And like I said earlier, this is about storytelling, right? So organize your deck in a way that you're able to talk through it with a lot of ease. If this order, for example, that we propose here is not working for you, if you'd rather talk about the business model ahead of the financial projections or the other way around, feel free to organize your deck in a way that it flows in your mind, in a way that you can talk through it without having to read word by word. So confidence and poise. What I like to call out here is that if it's your first time, for example, to present to an investor, make sure that you make a mock pitch, get a friend or a colleague, rehearse, try it out. If you only have, for example, 5 minutes, if it's your first time and then you find that you're only halfway and you have a minute left, you could panic. So if you want to be clear and confident in the pitch, rehearse a few times with a friend or a colleague. And correct your method. Right. Again, on the visuals, make use of graphics, graphs, make use of color, proper spacing, less words and more graphics. Let the deck talk for itself. Engage your audience, ask questions, respond to questions, tell a story that, connects with the audience. Don't just talk the whole time, especially if you have enough time. There are times if you only have 3 minutes, 5 minutes, you may not have plenty of time to engage the audience because you also have to present your business model. So depending on how much time you have, then you could have a more engaging session, asking questions and, inviting some reflections. So when you're handling questions from and objections from your audience, it's good to be very tactical about it, right? There are times you don't have all the answers. For example, to the questions, at times it's okay to say that you get back later. Keep it honest and short. If you're not sure about it, don't use too many words to deflect. Investors know that you may not have everything at the top of your mind. Again, keep it authentic. Make it your story, right? Make it your story. Tell a story that is relatable to your audience. Right. So the biggest success factor in your business is your team, especially when you're a startup. So here, it's very good for you to illustrate that your team can deliver on the business. Your team doesn't have to be very big if you're a startup. Maybe it's just 3 to 5 people. Just make sure that the way you tell your story, it shows how you can deliver on your promise using the team, using the team and tools that you have, for example, AI and things like that. Right. Work on a good conclusion, call to action, invitation to invest, just make it short and captivating. So those are a few things that you need to keep in mind when you're telling your story. So before we go to how you manage your investors, I want to pause again and see if there's any reaction from the room, Vilgro team, anybody else in the room. Any comments? Any questions?
Thanks, Jackson. One quick comment for me is, as you said, practice makes perfect. So don't wait until the day that you have an investor. You can also do. We also organize mock pitches, mock sessions, where we present to a mock investor. And we'll also have a final pitch session that we'll organize for all of you at the investor summit. But ahead of that, try to get in the habit of presenting your business pitching your business to your friends, first of all, to get feedback, to your colleagues in the office, and let them give you feedback, how you performed, how you can improve. And finally, when you get a chance to be in front of an investor, it will not feel awkward, right? So get in that practice. Also, make sure you have a recorded pitch somewhere. So there's some of these competitions, global competitions, where you are asked to submit a self-recorded pitch, where you're walking through your pitch deck, and you have to put your camera on, so it's recording both you and the slides. And what I found is that if that is asked and it's very last minute, then you are scrambling to put it together. While if you had already prepared something in advance, life would be much easier. There are a lot of those big competitions that ask for that kind of a recorded pitch. So have that handy somewhere, especially if you are applying for these global competitions like Seed Stars and others. Yeah.
Thanks, Wilfred. So maybe the question I can also ask: what have you observed when you're trying to pitch? Like when you're putting together your pitch decks and presenting to investors, what have you learned? Like, is there anything that you'd like to share that you've observed or learned in the process? Anybody? The founders in the room want to share for a minute? Any unique things you have seen or learned you'd like to share with the team? I may volunteer someone. I know quite a number of founders in the room. Dennis Mwangi, is there anything you'd like to share with the team? What have you learned as you work on your decks and pitches?
Oh, hi, Jackson. Sorry, I missed you a minute. Am I audible?
Yes.
Can you repeat?
Yeah. So Dennis, I'm just inviting you to share if there's anything you've learned as you work on your pitch decks and as you present to investors. What have you learned that you'd like to share in a minute?
Okay. I think the most important thing is, number one, to understand who you're pitching to, because different people have different motivations. And as much as we are trying to create a template for that can be used for as many people as possible. Try to be as specific as possible to those you are pitching to, because sometimes it can be the deal breaker. But what I've come to discover, majority of the time, anybody asking you for a pitch deck, they've already done some due diligence on you or some background checks on you, and they like what they see. So basically, this is more of confirmation. And don't break us. What is the word that I want to use? Don't break your back trying to make the perfect pitch deck per se. Just ensure that you convey the most important information to them. They already like what they see, and this is just to a formalization of the process. Back to you.
Thank you. Thank you so much, Dennis. Nasa, your hand is up.
Thank you so much, Jackson. And thank you, Dennis. So in addition to what Dennis has said, what I've found is investors are human beings, and human beings are story oriented, right? So pitching, it's storytelling. It's telling your story, the story of your company, the story of your vision, the story of the impact you want to achieve. And it has to fit a timeline, and it has to fit naturally who you are and why you are doing what you're doing. Because in most of the time, investors bet on entrepreneurs at this stage of the company. You are not a unicorn. You're just seeing someone with a vision and a passion, and want to ensure their money is safe with you. And the way you tell your story, the confidence you show, but also the sight and the vision you're articulating in your story, can make a deal or can break a deal. I'm not suggesting just to come with a story and not do everything that you mentioned here, Jackson. But if you add that to the due diligence that you have done, the likelihood for you to close the deal will be very high. That's my experience so far.
Thank you. Thank you so much. One last comment, maybe from Edith, Ilara Health. And you've done this for a while. So is there anything else you'd like to add? Any learnings that you have obtained along the way? Edith, are you there from Ilara Health? She's probably muted. Okay, that is fine. Omar, do you have anything you'd like to share? I happen to know a lot of you, so if I volunteer, you don't worry. It's all right. So I think you can just carry on. Thank you for that sharing. So, as a summary of how you get organized as you prepare for fundraising, what are some of the things that you need to keep in mind as you prepare yourself? So, number one is identifying the right investors, because you don't want to, for example, talk to 100 investors when you're targeting just 2 or 3. So, it's good to have a very curated list of investors. Are you looking for grants? Then just focus on the donors, right? So are you looking for, what I mean is do your homework, see what kind of investors invest in what kind of instruments, and what their preferences look like. So that way you're able to narrow down even before you go out in the market to talk to them, right? So are you looking for more patient capital, like concessional debt? Who is offering that? You can start by looking at that. Are you looking for equity? What are the equity funds that you have in your network that you can talk to, right? So that's extremely important. It saves you a lot of time. If you're to talk to 50 investors, you could do that for years. So if you have a curated list of 10 that you're targeting, hoping to end up with 2 or 3 that are very interested, then that could save you a lot of time, right? And then prepare a compelling pitch. We talked about that. And then leverage your networks and referrals. Cold calling investors sometimes doesn't work very well. So if, for example, you know a friend who raised capital from a certain investor, you could assume that they have a pretty good relationship, then you could ask for an introduction. That works very well, because then they start from a place of trust and knowledge, other than just having to learn everything about you and trying to trust you from the get-go, right? So and then demonstrate your traction and social proof, like you mentioned earlier. That's extremely important, and especially if you're pitching to impact investors. They want to see, beyond making a profit, how are you changing lives? What impact are you creating in your market, right? And also understand your investor expectations. That does the investor expect more profit than impact, or more impact? Like, what comes first with them? Is it profit, or is it impact, or is it the environment? Now, once you understand that, then you can tailor your pitch accordingly and bring out what they want to see, right? And then we also mentioned the team's expertise, and like we said earlier, in startup investing, investors invest in people, right? So it's good to show that your team has what it takes to build a business and take it to the next level, right? And then tailor your approach. This is storytelling. Make it your story. Don't read word by word. Make it almost personal. Let the audience feel your story, right? And again, we can't emphasize this. Highlight your social impact. What impact do you want to create? What's your theory of change, right? So what are the things that you're tracking? What are you measuring, and things like that. Also, very important, prepare for due diligence. This is where you can save so much time. For example, if you have a data room, ahead of time, get the most typical information already in there. This could be your KYC documents, your financial statements, your financial model, your company profile, the founder CVs, any research that you have done about your market, put it in there. Your company registration, tax compliance, all those kind of things. Make sure it's easy to tell what are the most common things investors look for. Even on a quick search on Google, you could end up with a list of like 10 things that you need to prepare. So if those are already there, it saves you time. Where they ask for them, then you have to look for them and share. So that's extremely important, right? And then make sure that you have a tracker. A CRM would be great, but if you don't have that, then you could also use Excel. Have a list of who you're talking to, what are they saying, have a way of rating them. For example, I like to use red, yellow, and green. Green being like the most potential investors, yellow being the ones you're not very sure about, and red may be the ones that you want to talk to last, if at all. And then that way you are able to prioritize your conversations. Right. So I want to quickly show you a sample of financial model. I think we've spoken about a pitch deck quite a bit. And before I do that, I want to check if there are any last questions on the pitch deck before you go to the financial model. Perfect. Looks like you're on the same page. So I'm going to show you a financial model example, just to give you some guidelines from a design perspective and from a completeness perspective. Your model may not always look like this because your business is different, but I just want to show you something that could give you some ideas on what tabs, for example, to have on your financial model. Let me know when you can see my screen. Is my screen visible?
Yes.
Perfect. So there's a financial model that we worked on a few years ago for a client. So this purely for illustration purposes. These are not actual numbers. They're just dummy numbers just to illustrate the point. So there are a couple of important tabs to think about. For example, what you're looking at right now is the cover page. Always make sure that you have a cover page on your financial model. When someone clicks on that, they're able to tell what they're looking at. And if there's some simple instructions, for example, mine here you see, I'm saying anything in blue can be changed because of assumptions. Anything, for example, in black cannot be changed because those are computations. You don't want to break your financial model trying to change it. So it's good color code where someone can touch. And then there's some assumptions that don't change a lot. For example, even some don't change at all. For example, you know, the when is your model beginning? What are the days in a year? These are standard things. Months in a year. You're going to use these numbers for you to compute your projection. So it's always good to keep them somewhere. As you can see, they are green. So if you change them, you don't break your financial model, right? And then your working capital cycle. What does your working capital cycle look like, right? What are the payable days you have? You know, what are the debtor days that you have? Inventory days. So there's something here that I like to illustrate, for example, when it comes to payables and receivables. So what I have here is wrong intentionally, just to make the point. For your cash cycle to work, always make sure that, for example, you collect sooner than you have to pay. So that means that your days for receivables should be fewer than your days for payables. For example, if I said here this is 28 and this is 45, then that could work so much better because I give myself a few days when I get paid before I actually have to pay out. Now, what would happen if you have, for example, 45 days here and then 30 days on your payables? So what will happen is that your debt will fall due before you collect your revenues, and your financial model will require a lot more financing. That's just a trick to remember when you're modeling your cash flows. Again, I only put this tab here because I wanted to schedule some investments, try out what various figures would do to the cash flows. So I'll just like come and plug a figure here and see what that does to my overall cash health. So another tab that is very important to have on your financial model is how you're building out your customers. I mentioned earlier, think about your revenue stream. How is your money being made in the business? Who are your key customers? How do you bucket them up? For example, in this case, I had one line being hospitals, another one being walk-ins. I mean, for you may also have like an app being another stream, and the key thing here is to think about what are the starting numbers, how are they growing on a year-by-year or month-on-month, quarter-by-quarter basis, as the case may be. So always make sure that your assumptions for every category of customers is very clear on your financial model. And as you can see here, my assumptions are in blue, and then what's in black here are computations from these assumptions. I then use these ones to compute my financial statements. Right. So this tab here in this model is a summary of revenues and costs. I think I just showed you a very detailed illustration of how to bucket your clients up, how to build your starting assumptions, how to grow them, how to compute, and things like that. Then here is where you summarize them. What's your price per unit? You know, always make sure that your prices are very clear per product, right? And why they are hard-coded here, I saw a case where I might want to change the price from year 1 going to year 2. I might decide, for example, here I'll put 10, 15, 20, and then the financial model just pick it automatically. So that's why I have a time series here. The times I've seen people having only one number for price, and you pick everything from there. Now you have a problem if you anticipate a change in price, for example, in year 3, right? So that's why I have a time series here, year 1, year 2, up to year 5. Then I can play the prices the way I want. Then what's the percentage of your COGS, cost of goods sold? This will give you your gross margin, right? So if your price is $10 per unit, how much of that represents the cost of production, for example, direct costs? Then that's what you put here. Again, I have a time series here because I might think, for example, with scale, I might be able to reduce the cost per unit. I might, for example, want to test if this was 45, then 30, what would that do to my overall profitability and also my valuation, for example. So this computes from above there, as you can see. And as you can see, every stream here has got its own assumptions around price and general costs. I mean, the COGS, the cost of goods sold, and the general overheads. We come later here. So this is another revenue stream, same story. Now it's good for you to also think what are the overheads in your business. how are they going to change on a year-by-year basis? How do you project your overheads from one year to another? I just mentioned earlier, for example, the cost of paying wages may change. And the question is, what does scale mean to you from a cost perspective? Now, this is why you must do your thinking. The list here you could have anything: rent, medical insurance, staff welfare, legal expenses, and things like that. Then it's also good to think about capex. What does growth mean from a capex perspective? Do you need to buy motor vehicles? Do you need to open new offices? Do you need to buy new computers? Now, this is where you put your capital expenditure. Just make sure that it's very clear when you buy things, because if you don't have these dates, what you'll find is that you might have a very front-loaded capital requirement. So it's good to also be a bit reasonable about that. Spread it out in a way that makes sense. Right. So from a team perspective, like I said earlier, what does this mean? What are the key roles in your business, and how much do they cost you per month? This list could have anything which is relevant to your business: managing director, CTO, for example, CFO, accountants, medical reps, technicians, and all kinds of people. It's also good to have them there and how much they're costing you per month. So, which is also why I put this up here, just to illustrate. And then what I would like to call out in this case here, and I can see I only have a few minutes, so I'll try to be quick. Have your list of staff here, and very importantly, the dates when they come on board. So again, you don't have people too early before you need them, and then you have a huge capital requirement, which is not necessary. So eventually, what this looks like I mentioned earlier, you're going to have a three-statement financial model. There's the statement of incomes. At times you call it the P&L. As you can see, revenue, direct costs. Then you can see your initial costs and overheads. The EBITDA will show up somewhere there. Your taxes and cost of debt, and then your net profit, like that. And then your balance sheet. Here's where you have your assets and obligations, and shareholders' funds and things like that. Your balance sheet must balance. We can talk about that later. That's something just to call out. And then your statement of cash flows, right? So don't confuse your P&L and your cash flow statement. Something for you to think about after the session: is it possible to have a profit-making business which has no cash flows, in terms of has negative cash flows, and what will cost that? It's something for you to ponder. What will make a profitable business? Here, the P&L have negative cash flows in the cash flow statement. Is something for you to think about. The rest are just summaries. This is an annual summary of the three statements, as you can see, year on year for 5 years, going all the way down. Then from there, you can create a dashboard that has what you want to show. What ratios are relevant to you? Do you want to show your margins and things like that? And what charts do you want to demonstrate? This is for your deck mostly. So just depending on the story that you want to tell, then you could choose what kind of chart you want to pull from your analysis. So I wanted to show that for today. We won't get into evaluation and the other things, but if you have a question around any of that, I'm happy to answer. I can see we only have 5 minutes to go. Any questions on financial modeling?
Thank you very much. This is Angelo from Sana Health in Rwanda. Thank you very much for for walking us through this. It's really helpful. My question is around currency conversion.
Okay.
Especially if you're working with international investors, how can you basically easily convert the currencies?
Right. So there are a couple of things I would say about that. So number one, you don't need to have a model version each time you're dealing with a currency. You could have a currency trigger, a button. In fact, let me just see if I have one on this model that I could show you, where you could just have a drop down, you select, and the model just converts automatically from a currency to another. I don't think I have that on this model. But the other thing to think about is you may not want to convert your numbers on a flat exchange rate unless your currency is fairly stable. So you can think about what a long-term FX rate to look like. You might want, for example, to have a rate for year 1, year 2, year 3, year 4, like that. You can get those numbers from, for example, Bloomberg. They provide some pretty decent projections or what a currency will look like. So I'm happy to chat to you on the side if you like some ideas on how to have a currency trigger that converts a financial model across currencies. But then if you want to make it simple, it's also fine for you to save another version and just convert. Something to keep in mind is that sometimes a flat exchange rate, for example, over 5 years may not work, especially in a pretty volatile environment. For example, in Kenya, the dollar was selling at 165 only 5 months ago. Now it's at 130. You can imagine what that means to businesses here that are trying to report in local currency and USD. Does that help?
Yes, that helps. I'll make sure that I get your contact information so that maybe we can chat on the side. And another thing is, can you please share with us a copy of this financial model template? Is that possible?
Okay, I'll see what I'll be able to share with you. I'll sanitize it a little bit and make it easier to follow. But yeah, let's start on the side and then let's see what will be helpful for you, Angelo.
Thank you.
Any other questions before I hand it back over to Karin? We have 2 minutes left.
Thank you so much, Jackson. This was really insightful. Thank you everyone for attending. If you have any questions or need additional support for investor readiness, please contact your PM and let us know, and we'll be able to provide support. And we will have the slides and all the content uploaded on Babel after this session. So please engage with the content on Babel. But other than that, thank you so much. Enjoy the rest of your day.
Someone is asking for my email. I think, Karin, you could share with them. Or could just type it on the chat here. Let me just try to do that for anyone who needs it.
Okay.
And with that, thank you very much for being a great audience.
Thank you.
Thank you.
Thank you.